Mortgage assumption agreement. Oh my gosh, what does that blah, blah, blah even mean? My name is Kris Krohn, this is Limitless Wealth TV, and today we are doing advanced vocabulary on mortgage assumption agreement. All right, my friends, welcome back. Kris Krohn here, and we are talking about advanced real estate vocabulary. And there's a number of you that have been reaching out lately and saying, Kris, mortgage assumption agreement. What is a mortgage assumption agreement? Well, first of all, this is a really good term for you to be aware of. If you're asking this question, then what it likely means is that there's a house that you would like to buy and you'd like to skip over the bank. And here's what it looks like. We've got the people that live here in the house. They're the ones in the window right here. And then we got you, these are the steps, and you're walking up the steps and you're knocking on the door. This is you and this is them, okay? Now, in this mortgage assumption agreement, there's a reason why they want out of the house, and instead of selling it, there's a reason why they're not. Maybe there's a divorce going on, or life got complicated, or something's happening. Maybe there was a death in the family and they just don't know how to really get rid of the house. So you come along and you say, I have a special agreement, and it's called a mortgage assumption. I'm going to assume your existing mortgage and I'll become responsible for it. You're under hardship, or you're not making your payments, or something's happened. So you guys move out of the house and I'm going to take over the mortgage. Now, if you do a mortgage assumption agreement, did you bypass banks? Yes. Did you bypass credit checks? Yes. Did you bypass needing to put a down payment? Maybe. You might have need to pay them $5,000 for them to enter into the agreement, or it's, nope, just please take over the deal. So a mortgage assumption agreement is basically you coming in and saying, sign this paperwork, I'm still responsible for the mortgage. Now, there's a couple technicalities you need to understand. If you sign a mortgage assumption agreement, whose butt is still on line for the original mortgage? Is it you or theirs? It's the original people still living in the house. If you do this agreement, by the way, the banks, all they really care about is that the mortgage gets what? They just want to know that the mortgage is going to get paid. And so they're going to make sure that that happens. And so even though you're taking over the mortgage, what you're doing is you're controlling the house and you're saying, I'm now responsible for making payments on this house. However, the big difference is that their credit is still on the line. You're borrowing their credit. You're borrowing their bank. Now, not always good news. Like, let's just say for a moment that they got a crazy mortgage and it's variable and interest rates go up. And you started the deal where you are at a 6% interest rate, but it goes up to 10%. Maybe the payment gets $400 or $500 more a month. Who has to pay that? Well, you're the one that signed the paper saying you're committed to paying that. Their butt's on the line. If you don't pay it and they don't pay it, their credit is going to get big time in trouble down the toilet. But they're going to be legally upset at you if you said you're responsible. And sometimes when things like this happen, you just give the mortgage back to them and be like, sorry, I'm out. And these things happen. It's something that actually happened to me one time. You want to make sure that you've got proper agreement, you've got good paperwork. And then one other risk to be aware of, technically, if the bank found out that you were doing a mortgage assumption agreement, it could trigger what's called the acceleration clause. Now, if you're on one of my previous advanced real estate vocab videos, we already covered that one. And it basically says if the bank finds out and payments stop being made, they can accelerate the mortgage and yank the house from this person whose credit's on the line and basically say that asset is ours, so we can make decisions because we don't like what's going down over here. But again, as long as the mortgage is being paid, banks just really don't care. Is it legal? 100% yes. This just comes down to individual banking policy. And banks all have different policies. That's the policy in general. So mortgage assumption agreement is your ability to step into someone else's house, assume the mortgage, start making the payments on their behalf, take over the mortgage, and basically acquire real estate with little or no money and certainly no credit. Listen, you have got to be feeling a little bit like a financial genius right now. I mean, seriously, just try throwing some of that language around. You're going to be puff out your chest a little bit. You're going to be feeling like the boss walking around town. Mortgage assumption agreement. Like, I totally know what that means now, right? And you know what? Everything that you learn here is making you smarter. Now we just got to get you out there in the game of real estate, doing it, crushing it, making it happen. So subscribe, ring the bell, and then hack on over to the website so that you can evaluate some of the different ways that you and I can start playing together in real estate and crushing it.